It's Wealth by Design time here on Edge Radio Australia. Welcome, everybody. And as you can see, the studio is a little fuller than it was just a little while ago. The man to my right, I would say my right-hand man, but let's be absolutely honest. I can't carry that. No way in the world. It's Jeff Bowman, Wealth by Design. Great to see you, mate.
Yeah, mate. Lovely to be here. Thank you for your kind invitation.
Hey.
For a return visit.
The door is always open, ready for you, my friend. Come on in.
Yeah.
But you brought a guest today.
I have, yes, special day.
And I'll tell you right now, we've had a bit of a conversation off air, and I'm already surprised by it, mate. You've got a bit of texture to you, some layers there. So let's get into that. Do you want to do the introductions there,
Absolutely.
Jeff? Yeah.
Thank you, Aaron. Yeah, so we have a special guest today, Mark Hann from Tactica Partners. And I've known Mark for a while now through a few business associations and some social connections.
Yeah.
And as you know, and if we've spoken about quite a lot on this radio show, that Wealth by Design really is all about connecting professional people.
Exactly. Right.
That generally are touch points for people on their journey to financial independence.
Sure.
Making their business profitable so they can pull money out of their businesses, so they can talk to professional people about how to invest it and grow their wealth. And we have mentioned a few times that one of the problems that we keep an eye out for when it comes to referring our clients and our community to accountants is, look, just how sharp is your accountant?
It's unbelievably. There are a lot of accountants out there, okay? It's not a profession, falling over my own tongue here, that, is missing in the workplace, but good ones are. That's the difference.
Yeah.
Ones that are very proactive, and this is something we're going to talk about.
Yeah, absolutely. Yeah. So we've often coined the term, is your accountant? We'll quiz our clients about their professional advisors. They could be legal, they could be their financial advisors, they could be accountants. And we'll say, look, how does your accountant deal with your situation, from the point of view of planning for the rest of the financial year or for the next financial year? Like, is your accountant and an historian, we would say. And they would go, what does that? What do you mean by that, Jeff? Was, well, do they just record all the past, do your tax, and give you a bill?
Yep.
Oh, yeah, that's what our guy does. And I say, well, there's a different world out there. You're running a business. You've got to do planning, and a really good accountant is someone that will be by your side. And Mark will be able to obviously explain this better than I, but be by your side and be a partner in business.
Sure.
And have a sit down in maybe March, April, and think about the rest of what we're going to claim as deductions and plan for super, et cetera, and then plan for the next financial year. And so, so great to have you in, Mark.
Thanks, Jeff. Thanks for having me.
Absolute pleasure.
Looking forward to the next half an hour.
Yeah. Oh, look, no guarantees it'll be half an hour. We might go off on a tangent.
Oh, okay.
We could be here for hours. Who knows, right?
Terrific.
No, we'll see how we go, mate. Well, we've already found out that you're a sports fanatic. Come on, let's face it. Ex-Claremont footballer, very, very cool indeed. You went right up in my appreciation right there. But we're here to talk about your profession, obviously. Sure. So, look, accounting is seen as something. Look, we all joke about it being dull, okay? But the point that Jeff brought up before, this is so true to me, right? So I've had an accountant for years, obviously, and she contacts me and says, oh, yeah, have you got your act together? Basically, I need this, this, and this. And then she disappears, right? And I'll see you next year almost, kind of thing, apart from a couple of times during the year. But there's big gaps. There's no planning. It's very much about documenting history. It's not really planning and using strategies. So I hear you do things a bit differently, mate.
Yeah, look. First of all, I've got to acknowledge that the historian part of what we do is actually pretty important.
Oh, of course.
And the tax stuff that sits in there has its role to play.
Yep.
I think we consider ourselves a small, medium-sized enterprise, and most of our clients that we like dealing with in the business world fit into that kind of definition, I suppose. What we try and help our clients do is help them to be comfortable and educated around their numbers, and helping them to create processes that allow them to look into the future. So we do look out the back window a fair bit, but we like to help them look through the front window. And what I've come to realise, I suppose, over the last however long I've been, 20, 30 years, so I won't give away too much of my age, but is that a lot of our clients, although they're business people, they've often been good technicians, and they've come into business on the back of being good
And
people
something
in
else.
whatever,
Yeah.
in their passion for
Sure.
life or whatever it is. And the business sort of thing just kind of grows around them, and suddenly they wake up and they've got some staff and then payroll issues, and then, tax and BAS and reporting and just trying to deal with clients and all the things that make a business work. What we've come to appreciate is that as accountants, we deal with numbers all the time, and we're looking at our clients' financial statements. And you mentioned financial statements to clients often, and I always think that they know what a profit and loss is, and they know what a balance sheet is, and they know what the numbers on them are. And then when they're looking at something, do they actually know how to read them?
Sure.
So we sort of take our clients on a journey through what we simply call management accounting.
Okay.
It's just a monthly process. We try and forecast out a year budget to try and give them a bit of a look forward. What does next year look at? We help them take away the pain. A lot of people get very uncomfortable with trying to make it perfect, and we want it accurate as we possibly can, but to unhinge them and make them feel comfortable about this is their best guess.
Yeah.
And then we, on a monthly basis, measure what the actual numbers are against their budget numbers. No rocket science around really that, but it's amazing that there are so many of our business clients out there that aren't engaging with the numbers. They do have terrific software. Xero or MyOb these days is fabulous. Most people aren't using them very well. And there's lots of information, lots of reports in there. But I get it. We help our clients start learning some of the basics around looking at their P&Ls and balance sheets.
Okay.
Maybe some of the things, the key items that we would help them identify. So we sit down with them a meeting, bring up their numbers, put them in to take against their budgets, factor that in, see how that's looking against what they think the year might look like.
Right.
And then we start having kind of rich conversations. As clients get more comfortable about understanding what they're seeing in front of them, they're learning about asking why doesn't that look right? How come that month's different here? Why were we so out by this much? And how does that impact our bottom line, net profit? And then we often find that where we start running the questions initially in those meetings,
it flips.
Great. And we're answering the questions that they start asking.
Look, Mark, you made a great point. I mean, we use Xero here, and I'll be honest, I look at it and I go, that's on that side. Okay, look, just could it please match up? And I have these moments of, gee, I wish there was someone who would just look after this for me. I mean, having those projections and knowing if you're on target, I guess, is a really big thing, because if you just leave it and it comes to the end of 12 months or the big rush before the end of the financial year, there's a lot of pressure and you can get it wrong, right? Yeah. This is where expert advice is so important. It really is a big deal.
Yeah, it's key. And I think, one of the very basic fundamentals of that is if the information's not reconciled, it's not correct, it doesn't matter what sort of reports we throw up, we're talking nonsense. And so the discipline so we have some bookkeepers in our business that have the accounting discipline that actually help maybe people have their own bookkeepers arrive at a confidence that their numbers are right. So when we're reporting them, pretty much most of the time we've got them right. And that's a pretty big key.
Yeah, well, the confidence to know your numbers are right, and you're not having to do, clean up aisle 4 in June, which often, we do feel like that in business. Yeah, if you haven't put those projections forward.
Yeah, absolutely. Yeah. So look, that's a process, and look, we've got a case and example at the moment of a partnership of electrical engineers. They've been with us in the management accounting bit for probably now 18 months probably 2.5 years and plus. And for the first time, the next part of this management accounting process is actually doing a forecast on cash flow. So one of the great things about that is a lot of clients look at their bank account, which is again a bit of a historical thing, because it's recording what you've paid for, what you've got in, but there's all this other stuff out there that you haven't collected or you've got to pay, and all of those sorts of things. So the cash flow forecast gives clients a really good understanding what their bank account might look like in X number of months' time, depending if they hit the budget numbers. So it flows through. And we had these guys from the electrical engineering business were having trouble in having confidence around. They wanted to pull some money out, some dividends out. They tried it one year and they pulled it out and they overdrew it, and they had to put some money back in to fund some shortfalls that they hadn't planned out. And so what we were able to do with them through some software package, a cash flow forecast, and now we're sitting down and it's showing them when their bank account looks robust enough for them to pull enough money out to leave an adequate bank balance in there to help the business run. And their confidence and excitement about coming in and meeting your accountant to see where they sit in terms of what the forecasted bank balance looks like, assuming everything else lines up, has just changed them.
Look, Mark, if I was coming in and you were giving me the good news, I'd be excited to see you as well.
Because it's relief and excitement, isn't it?
It's control. It's control.
Yeah.
You're suddenly finding that if you implement these things that deliver the forecast budget P&L, this is the implication on how it looks like in the bank. And that's a reality check. That's a real tangible thing that people understand. We got money in the bank. We can take some, or we can spend it on something, or we can do whatever, but we can sleep at night knowing that we're not having to run around and chase up our debtors and
100%.
do that anyway.
And when you're building the business and you want to reinvest in the business, you might need new gear, whatever, some sort of infrastructure. Okay. If you don't really know your cash flow, that is extremely, it's frustrating, but it's also full of tension because, can I do it? Can I justify the expense? And sometimes you'll actually hold back, which is holding your business back.
It is.
You're hampering your own business.
Yes, you're nervous about a decision that you don't really fully understand the consequence. And then, what comes on from that is then we start talking about values in the business. What's the business value? If we're looking to bring on maybe a shareholder into the business, what might this number be looking like? So we start taking the business on a real journey. That is exciting for our clients.
Well, speaking of journey, I'll tell you what, we've got someone right there on the journey here. A question from Lisa. Thank you for the question here. Mark, is there a particular demographic that struggles more?
Demographic, I'm assuming that would mean something to do with the business sector or something.
Probably in the business sector, I think. A particular industry.
Look, I think I wouldn't say any one particular sector stands out. I think the property sector and the building sector have some reporting, complexities that need some time on to extract the useful data because of the nature of, a residential building might take you 2 years. And so you got all these costs. And of course we hear about, ever increasing costs, and how do you factor those in and get them in line so you've got control. They're difficult ones, and we have seen a lot. I mean, not so much in our client base, but in the news we're reading about how many builders in the WA market have fallen over. So that I think that has some complexities, and that requires some time, but it's still manageable. And if the numbers are right and you can plan out and you can see the implications going forward and understand that, then that goes a long way, I think, to protecting those sorts of areas.
Interesting. I had a friend in the building industry a couple of years ago was talking about the fact that because the costs were going up and up and up, he was just adding, boom, I'm just putting 40% on my quotes, right? Now, that's all well and good. It's a big risk. But the other thing is you're really making yourself uncompetitive. And how do you tender for a job if you're kind of making the figures up on the run? Whereas if you've got this information when you've actually done proper forecasts, you can do it with a lot more accuracy.
Bit more certainty.
Those long-term contracts are very hard to factor in things, and I suppose that's why a lot of builders these days are doing cost plus. You don't see fully fixed in costs much these days, I don't think.
I can imagine.
Mark, got a question just in relation to off the back of a comment you made earlier. Is there a bit of a rule of thumb for cash reserves that a business should hold, say 3 months worth of full trading, and put those cash reserves aside in an offset account or something like that? Is that something that comes up in discussion with your planning?
We just have a general. I read it somewhere back in time, and I haven't there, so I'm not sure there's any great theory behind it, but we tend to use a 2 times monthly overhead.
Oh, there you go.
Okay.
And that's a
Good formula.
2 times.
Yeah.
It's reasonably simple. It does mean you've got a fairly robust bank account typically sitting there, and it kind of works.
Okay.
Yeah. Okay.
And where are most of your clients at with their super from the point of view of meeting all their employee obligations with superannuation guarantee super? Is that an area that you keep an eye on? Because sometimes some businesses can fall behind in that.
Yeah, look, it's becoming harder and harder to fall. Well, should I say harder? The tax office, to their credit, have made the requirement to report a single touch payroll and so forth on super pretty robust. I mean, certainly we still see commercial businesses falling over and having not met their obligations, and
Sure.
then often it's the ATO who are the significant creditor that is actually foreclosing on clients. We tend to find, particularly with our clients who are involved in their management accounting, and that seems to provide a good purpose and forecasting again about the sort of numbers that they need to be factoring in to allow that. So we don't see a lot of that issue in our client base. They're pretty strong on it. And BAS reporting as well.
Yeah, and it comes down to good advice. Education is everything on these things, right?
Correct.
And it's certainly something like, that kind of structure of business, something I'm certainly not strong at.
Right.
So I'm very happy to be the dumb guy in the room and just give that. And I think a lot of people need to think that way.
Yeah.
Give the jobs to those who have got the talent, who've got the skill, have got, the structures is a big thing too.
Yes, certainly.
Lot.
You when you're talking to clients about, asset protection, we work hard to build our asset base, and often it's house, home, and, some other pieces that hang off that.
Sure.
And you certainly want to protect that from if you're in business, high risk structure such as a business needs to be structured separately and independently away from some of the other things that are going on. So it's a significant part of your advice.
And a lot of things, a lot of people would be if you've started as a sole trader, for argument's sake, everything starts very simple and then it grows and grows, and therefore you might have structures that are completely out of date.
Yeah.
So you need to get that advice on how to build these things.
Correct. And to the government's credit, particularly around some small business concessions, they've made the ability to roll out of sole trading structures into trust structures or company structures. I won't say much more straightforward, but it does come through without having to incur significant capital gains tax obligations and things like that. Okay. So, good advice around because people do grow, their businesses do grow. They start from nothing. They have no assets. They're going out and having a crack at something they typically enjoy. And if it works, then suddenly, as I said before, they wake up one day and they've got a business and obligations, and that requires some planning.
I always remember the saying about retail is the accidental profession. Okay, a lot of people who start in retail and they find after a while they might say, using this as an example, then they end up finding they buy the business, or they go and build their own based on the same sort of thing. And you don't have the skills, but you've kind of fallen into it. And again, the structure is really, really important, because otherwise you do leave yourself very, very vulnerable.
Yeah, correct. Yeah, very much so. And I think today's age of technology, ChatGPT, and being able to maybe drag up some benchmarking data and doing some comparisons, and then just demonstrating that, converting numbers into graphics is everyone enjoys looking at a picture. They don't like looking at a spreadsheet full of numbers, which is, I get it.
Oh, come on, Mark, you love it. You love it, I can tell.
Well, and again, things like your Xero, these days, the reports that are coming out of Xero, you can really become quite focused on the reporting that you want to see. And it doesn't have to be complicated. It can be a story that is simple as a bar graph or a chart of some description.
See, I didn't know that. I didn't know that you could actually use the tech to convert it. That's brilliant.
And Xero does itself. It's got a suite of reports in there that, again, most people are perhaps not aware of.
There you go. Perfect example.
Go and
right
have a
here.
look. Go and have a
There
look
you
and
go.
see what
Didn't
you
know that.
find.
Yeah, that is fabulous because there's so much of the technology is not fully understood.
Nah.
And unless you can explain it to people. Rolling back a bit on your point in relation to super and small business concessions, where some businesses think in terms that that part of their superannuation retirement is selling their business, right? Because some do, and they're good businesses.
Sure.
Can you take us through some of the basic parameters when it comes to the length that you've had your business, the amount of money that you could roll over into super and get the capital gains tax concessions? A bit of a rundown on that.
Yeah, look, it's probably a session in itself. In fact, it is. It's a pretty complicated thing. In fact, by way of example, we've got a client that's involved in locksmithing. They sold a commercial property that they used to run their business from.
Okay.
They had that for over 15 years. They were a partnership. They've rolled into a different structure. We've engaged. We know that legislation is quite complex. So we typically engage with tax lawyers to assist us in working through the significant networks and road paths that go through those concessions.
Okay.
Because the implications of what you say, Jeff, is important, because you can roll out of those things with tax-free either contributions to super if you're under the age of 55 at the time of the CGT event, or if you're over the age of 55, then you can take it and you can take the payout as cash.
Okay.
And we even had the example with these particular clients where the husband was 53 at the age or time of the CGT event, which meant he was under. He didn't want to put his money into super. He didn't want to lock it away.
Okay.
And there's a rollover provision that allows you to extend that time by a couple of years, 2-year rollover provision, which then will enable him to take that money as cash in 2 years' time. And that's part of the small business CGT concession. So, A, they're very powerful. B, they're very complex, particularly when you're involving trust structures or companies or shareholdings or other matters. And probably C, is sitting behind it, is that because it's so powerful and saves people a lot of tax, the tax office are very keen to have that area of legislation as part of their significant review processes. And they've issued another, not announcement, but just a correspondence saying, this is on the radar again. And if you have clients that have got small business CGT concessions rolling through their returns, there's spots in the returns that identify those, and so you want to make sure that you've got all your ducks lined up and the supporting documentation that sits in behind that to make sure you get through the.
It's a great point. I mean, obviously this is not financial advice. So we're having a conversation about education, and this is so much a part of it, being educated about the different structures. Really, really important.
It's a minefield, but
really
it's a very important one to navigate. If you can get major capital gains tax concessions when you sell your business.
Correct.
Another tricky one I've got for you. There is this unfortunate situation where accountants can't give financial planning advice, right, unless they're licensed. And you must come across situations where, because you're doing their tax, you're working out where their tax deductions are. Superannuation is a big tax deduction, up to 30 grand a year, or non-concessional contributions up to 120 grand a year. How do you navigate that where you can't give advice, but it's clear that they got cash and they haven't been maximising their contributions into super? Because it's an obvious one. It's a tricky one for accountants. And we come across that a lot, where we'll say, look, you haven't been, because we don't give advice either, but we do lots of investigation work and we do lots of education. And so we'll go, you didn't meet the deadline to put your 30 grand into super, this year, like 2024.
Right.
And they go, no, we didn't, because, we don't have an advisor. We didn't really know how to do it. And I would go, but you've got heaps of cash and you're paying full tax and your super balances are low. Any reason, isn't that something you should be considering? And they go, oh yeah, Jeff, can you help us? Well, it's difficult for us too, because we can't give advice, but we can give them education around things like, well, you can put in 30 grand a year. That's just public knowledge. But then, because we know, being financial advisors, you can actually go back 5 years and there's things called catch-up provisions. So we'll educate them on how that works.
Gotcha.
And we'll say, and I found about 300,000 in catch-up provisions
Got
of
to be
super
kidding me.
for a couple.
Wow.
That were paying all their money out of they were paying themselves 150 odd grand each out of their family trust. They ran a paramedical business.
Sure.
And I'm just curious as to know how Mark would deal with something like that. Do you refer that work straight to a financial advisor that you know? How do you do it?
I suppose, and this might be treading a fine line, we can provide tax advice. So we can demonstrate to people the tax implications of making a concessional contribution, and we can advise them of what their either concessional cap is, or if they've got the carry forward rule available to them, what they might be able to make a contribution to. We got to be careful to say we can't tell you to make the contribution because you've got to consider your wider financial things, and then then you go and speak to your financial planner to make sure that fits within your other financial plan. Now, if a client decides not to do that, that's entirely their remit.
Yep.
But as long as we're saying we're giving you the tax advice and we give the tax implications, and we can put out a table of tax forecast based if you do and if you don't. We do spend a bit of time around that with clients in our last quarter of the year as we head towards the 30th of June, because, as you say, people do get late and lazy and not lazy, but get caught up in other things. But it can lead to significant tax breaks for clients, which is, generally a pretty straightforward thing to implement.
Yeah, well, let's look at the very simple terms, okay? In business, okay, I mean, it depends obviously on your tax rate, all sorts of things, but ultimately, if you could make an extra 17%, while everything's been adjusted, like when you're fighting for most businesses for 2 or 3%, 17 is fantastic.
I know.
Why pay it if you don't have to?
We talk about that a bit with our guys. Like, it's an obvious one. If you're earning between 35 grand and 130 grand or something, 45 and 135K, you're in the 32 cent bracket. Right. So we'll often say, look, if you're not making the maximum 30K deduction between your employer contributions and extra top up should you do yourself, and the super fund's got to pay 15% contribution tax. We'll take 15 from 32. Oh, you got 17.
Oh, there you go.
Yeah, and you go, gee whiz, that's pretty good. And
talking to you is obviously sinking in. Look at that. I came up with the figure. In fact, Chris Chris has obviously agreed with me. He says Jeff is a legend. Look at that. Fantastic.
Well done, Jeff.
Good on you there.
Go, Chris.
Fantastic, Chris.
I've just been to lunch with Chris. He's onto it. He's onto it quickly.
Oh, fantastic. But it's true. Like, we work so hard for those last bits of profit, and everything with business, it cost and expenditure and yada yada yada. We've got to think about these dollars, and then we throw 17% away.
Yeah.
It's
and if you're in a
crazy.
high tax bracket, it can be 24%.
No sniffing impact.
So that is so the old rule of 72 pops up, and we try and encourage people to think about maximising their returns, etc., etc. So now another one for you. As you know or may not know, Wealth by Design have a platform that a lot of accountants like using because it has a dashboard built into it, so the account holders can give their professional advisors, their FinPros as we call them, which is their self-managed super fund advisors, their tax accountants, their bookkeepers, even their estate planning lawyers, get access to their crypto asset data. And of course, it's just filtering through now, but we're getting accountants refer work to us where their clients have said, hey, do you know of anyone that can assist us with security around their crypto assets? And it's a question that will go to the accountant, because the accountants looked at the balance sheet and like there's 380 grand worth of crypto assets on the balance sheet, and it's probably not in super, it's probably in their private name, and they've been building them up for a while. Are you starting to get any of your clients say, hey, do you know anything about crypto? Have you getting any of that yet?
Look, there's smatterings of conversation around it. We've had it, and it's can be a bit of a nightmare in terms of trying to compile the summary P&Ls around what they've done on their crypto trading, particularly going back a couple of years where people were using different exchanges and they were transferring Bitcoins from here to there and then creating other coins. I think in the platform you're referring to now, what I understand is that you guys provide those financial accounts at year end as part of the process. And, as far as accounting goes, I haven't seen your reports, but I understand they deliver everything that we need in terms of providing the information that gets lodged into the tax return. And, the ATO are onto it and they're issuing, advice around how that's done, and they're tracking the exchanges, and they're aware when people are doing Bitcoin and crypto kind of transactions. So I'd say it's not an avalanche of information, but there's certainly
it's starting to trickle through.
Yes, very much so.
Yeah, good. Yeah. Oh well, that's just part of the financial landscape and the diversification of assets.
I'll pop that up on the screen actually, wealth99.com, because obviously that's in the crypto sphere as well. Always good to sort of know about these things. Great to see these questions coming through. I do notice we've actually got a lot of questions coming through on other platforms that we can't see, so we'll have a look through the week on those ones. That's absolutely fantastic. Now, we've been talking a lot about finance. We do that, wealth by design. But let's get back to the football, mate. Now, come on. No. I'm only teasing. But hey, how many years were you with the Claremont Footy Club?
My career was 83 to 93, so I was there for 10 years.
That's fantastic.
Great
club.
It was a great club. It is a great club. Yeah. And I love the concept of sport and how it engages the community and all the benefits it provides. And so to play for Claremont was great. I was there in an era where the Dockers, had started, the Eagles were starting, had started in 87. So we were going through that transition, and and a lot of my very good mates have come out of the football world. Sure. So
I always like people who have a competitive side when it comes to business. Let's be honest. If you've had a bit of a sporting life, or it's just it's you in your DNA.
It is a bit in your DNA. Yeah. I do try and suppress it a bit because sometimes losing marbles against my kids is a bit of a worry.
But, it teaches them to be a better marble player.
It does.
Right?
It
come
does.
on,
it's a very important skill.
And Mark, you had a stint as a WA commissioner as well.
I had I unfortunately get voted back on, but I had 3 years at the commission, thoroughly enjoyed it, and opened my eyes up to, again, what a game like football can deliver into the community, and then at the elite level, and for, the supporters of clubs, and, it just touches so many people. And footy by its very being, that it's probably the biggest game by number as a sport. For teams, so it's 2 teams to play. It's 40 plus. Depending how many are rotating off the bench, and then it's got another 20 people around who are volunteers, and then now we've got women's and all abilities and masters and amateurs, and we see in country areas when a football team disbands, how it rips the heart out of a.
It's a really good point. It's such an important part of the community. Yeah, absolutely.
Yeah.
No, that's fantastic. Yeah. All right. Well, look, I just want to touch on that a little bit. Why not? Look, gentlemen, we've hit the end of the old time here, so thank you very much for this. Mark, it's been an absolute pleasure, mate. You're very welcome to come back. And
I'd love to come back. I thoroughly enjoyed it. I love your studio. It's got a lot of atmosphere, and I'm sure there's a lot of stories coming out of these.
A lot of stories, I'll tell you right now. Fantastic. And of course, Jeff, mate, always brilliant. You bring brilliant guests along. So
we are. Well, we're a class outfit.
I know that.
We're a class outfit.
Come on, look at that.
And
when's your next event?
Our next event is actually next Monday night.
Oh, there you go.
Yeah, next Monday night, 5:30. Invitation only. But so if anyone would like an invitation, just let us know. Go through to wealthbydesign.com.au and put a comment in there. And
absolutely.
Our executive team, headed up by Lisa, will be in contact with you, and we'll see if we can see if we can squeeze you in. I think we're nearly booked out, but there could be a couple of spots left.
There we go. Well, it's actually running on the bottom of the screen at the moment, wealthbydesign.com.au. And of course, it says also you can listen live at edgeradioaustralia.com. This is going out audio. Obviously, the video is going out throughout the world. So if you want to catch up, if you came halfway through, feel free to jump back and have a bit of a watch, because it's been some really good information.
Yeah, no, well done, Mark.
Yeah,
thanks very much for coming
Thanks for
on.
having me. I've thoroughly enjoyed it. It's been great.
Great. Thanks for being part of Wealth by Design here on Edge Radio Australia.